There we are. Good afternoon, ladies and gentlemen. Thank you very much for staying to the bitter end with us this afternoon. I have the honor to walk the 50 or so feet across the podium to the main stage. And what I would like to do in relation to travel and tourism is to present to you initially a global snapshot of what's going on in the hotel market. The hotel industry, as you know, follows very closely from the rest of the global economy, and generally when the global economy is going well, the hotel industry is going well. So what I've done is I've put together some slides that show you in a RevPAR capacity, so revenue per available room, which is the global industry standard, kind of exactly where we are in terms of hotel performance. And as you can see from the chart, the American market is definitely much quicker in picking up compared to the rest of the world. That is predominantly driven by occupancy, the average rate. So the amount of money that the hotels are able to charge in the US has not gone up dramatically. But there has been a big increase in demand in the United States, which means that we're looking at around about a plus 5% RevPAR picture. The picture in Europe is much less healthy, but it still is positive. It's only plus 0.6, but it is a positive measure. Europe, like America, is benefiting from an all-time low in new supply coming on into the market. So on the one hand, when you have a credit crisis and people can't get access to capital from a development point of view, it's very bad because they're not building any new hotels. From an existing hotel supply, it's actually extremely positive because it means there are no new hotel bedrooms coming in to take up the slack. However, when you look at demand levels are pretty flat, which means that there's no big increase in occupancy, there's no big increase in rate, so it's bumbling along the bottom pretty much as we expected. And if you think about Europe being about 5 or 6 years into a 10-year deleveraging cycle, the fact that we're positive at all, I think, could be seen as a good indicator. The other thing that I think is important to look at, of course, is Asia. Asia is down 4.1%. That has nothing to do with demand. Demand in Asia is still extremely strong. What is happening, though, is that they were very hardly affected by the global financial crisis. China specifically is seen by the international brands as the poster boy, if you like, for hotel development. And in the Asian market alone, over the next 3 years, there will be a confirmed additional 400,000 bedrooms into the Asian market. So demand is still very strong, but there's an enormous amount of supply coming into the marketplace that needs to be picked up. So in terms of summary, so the US still very strong, other parts of the world less strong. South America as well has basically stalled. South America, obviously Brazil in particular, an interesting hotel market because of the Olympics, because they found oil, because they have the World Cup coming up next year as well. The problem with a lot of these emerging markets, whether it's South America or India, is really twofold. The first is that land costs are extremely high. You know, in Europe, you'd be looking at 30 to 40% of a development cost being land. In Asia and South America and India, that's somewhere around about 60 or 70%. In addition to that, you have very, very high interest rates, around 13, 14, 15%, which has really stalled any new hotel development in those markets. So in terms of tourism and leisure, the good news is that for the first time last year, global international tourism level, number of travelers traveling exceeded 1 billion in the year for the first time ever, and is predicted to go up at a similar rate this year, anywhere between 3 and 4%, which is obviously extremely positive. In addition to that, much of that travel is beginning to happen from the Asian market. The Asian market has been reasonably active on a domestic level, but you have various points that have hampered that. In China, for example, there are basically 2 weeks, they call them the golden weeks, where they go on holiday, and everybody in China goes on holiday in exactly the same period. Not exactly good for creating a sustainable domestic demand. However, this is changing. Globally, in Q1 of this year, there were more bedrooms sold in a quarter than were sold anywhere at any time in the world. So there is big demand out there. People are really beginning to travel. And if China and that specific market starts traveling internationally, just 10% of the way that the more mature markets do, will mean a tremendous influx of visitors into all regions, so whether it's Greece and Europe, and they're very, very positive about coming to this region, but there are obviously some challenges to do with visas and other such things which need to be met. In terms of building sustainable tourism, looking very, very quickly at the Greek market, they have some incredible strengths. The product here is really second to none considering, compared to what else is available in Europe. However, we believe that this has led to a certain amount of complacency in the marketplace, which we've also seen in Spain as well, that people believe that the natural product is so fantastic that the capex and the investment in those markets doesn't necessarily have to be as high as it is in other markets, and that means that the Greek product, I believe, has fallen behind other markets. There's also extremely strong competition from new markets like Dubai, like Turkey. And so in order for this specific market to be very successful, there needs to be a very, very clear, cohesive approach, bringing together all of the operators in the industry to come up with a very clear plan that can be sold to the rest of the world. The good news is that there are very good examples of other countries who have been in very similar situations that have done this. Ireland has done this several times. Their marketing spend is very high. They have a single clear message. It's delivered across a multiple of channels. They've got together all of the relevant bodies in the marketplace. They've built a strong MICE business, and they've really been able to drive GDP growth through tourism. And in a market like Greece that is so dependent on tourism, that if those things can come together, we truly believe that within the next 3 or 5 years, there could be a significant uplift in that particular marketplace. Thank you very much.